Welcome back everyone, my name is Angelo. September was another action-packed month, especially the second half, with the stock market continuing its nosedive all the way up to today, October 6th. As a result, you're probably wondering what may have caused this sudden turn of events, just as ETFs were finally approaching all-time highs again. And what is the last quarter of the year going to look like? Are we going even lower, or is a market rally more likely? We'll discuss all of that in today's video, while taking a closer look at everything that happened to each of my investments in ETFs, P2P Lending and crypto in September, and any important events up to today, the 6th of October. Let's begin with ETFs, making up over 70% of the investments I share with my wife. Our main ETF, the accumulating Vanguard FTSE All-World, was doing quite well until the middle of September, after which it kept dropping on a daily basis, finishing the month at minus 1.57%. As a result, after being up over 14% for 2023 just a few weeks ago, our year-to-date returns decreased to 10.76%. And here's where our ETF portfolio stands in actual numbers as of today. While the last 3 weeks were rough, with our investments dropping 4.76% or 11,670 euros in value within such a short amount of time, we're still up over 18,000 euros since the start of the year, plus 1,411 euros in dividends from our older distributing ETF shares, and more than 37,000 euros in total. If you're curious about where we currently stand as far as our early retirement goal is concerned, and my response to 6 major criticisms I keep hearing about financial independence in Europe, make sure you check out this video of mine next, which I published about 2 weeks ago. Now, here's the most likely reason why the market dropped. Right now, we're in a difficult economic environment with high interest rates by the Fed and the ECB to combat inflation. This is usually a hard period for stocks, since a safe yield of 5% in government bonds in the US or 4% in Europe on euros starts to look quite attractive in comparison, and companies expand less as borrowing money has become much more expensive. Most market participants expected the Fed to start lowering interest rates again in the coming quarters, but based on the Fed's statements, that now seems less likely, with Goldman Sachs now forecasting a much later rate cut in Q4 2024. The same is true for Europe, where we might see the ECB keep interest rates higher for longer. Since the markets quickly priced in the change in expectations for the coming year, which could result in lower earnings for companies as well on average, stock prices dropped across the board over the last couple of weeks. Before we go over into which direction I think ETFs are going to move in the last quarter of the year, don't forget to gently tap the like button if you're enjoying the video and to subscribe if you haven't yet. If you'd like to support me, you can find my links to the best low-cost brokers in Europe for ETFs in the description below. Now, after the recent sudden pullback in stocks, many investors are understandably feeling fearful right now, as we can see in the Fear and Greed Index. But, as Warren Buffett likes to say, be fearful when others are greedy and greedy when others are fearful. And based on data from the US, the last 3 months of the year tend to be by far the best ones on average historically as far as stock market returns are concerned, especially November and December, while there tends to be more volatility in October, just as we're seeing right now. Still, nobody knows in which direction the market is going to move in the short term, so as for my wife and I, we're simply sticking to our long-term investment strategy anyway. We just keep buying a single low-cost ETF, the accumulating Vanguard FTSE All-World, every month, no matter what's going on in the markets at the time. Just as I discussed in this video, you can always choose to cost average into the markets over time, instead of investing everything we were planning to invest all at once. Especially if you're feeling nervous about the current environment, this approach could help you sleep better at night. And since you can now earn 4% interest per year on euros using Trade Republic, secured by a 100,000 euro bank deposit guarantee, you'll still be able to earn a nice chunk of interest on the money you're not planning to invest yet. My wife and I are using them as well to earn interest on our own cash reserves. Here's how much we accumulated in interest in October so far, which is then paid out at the beginning of each month. I even bought my first Euro government bond, another feature they just added. I shared all of this in my video last week, which I'll link down below. Okay, now let's move on to my investments in peer-to-peer lending. As usual, you can find links to any platform I mentioned in the description below, in case you'd like to check them out and support me. Let's start with my monthly overview. I earned a total of 284 euros and 94 cents in interest in September, making this a good month overall, but not nearly as good as August. According to Portfolio Performance, which I use to track my investments, that's a monthly return of 0.66% and an internal rate of return of 9.18% from peer-to-peer lending this year. Let's take a look at a few peer-to-peer platforms one by one. Starting with my largest investment in the sector, Mintos, where I added 600 euros in September. I was happy to see my overdue payments decrease further. Mintos is still working on launching bonds and ETFs this quarter. In fact, you can sign up to early ETF access right now. I'm curious to see what that's going to look like in comparison to what the best European brokers offer, especially now that Trade Republic has made fractional bonds so easily accessible. Next is Escatit, which had a below average month overall, but then again this means my interest earnings in October will most likely end up being above average. I made an additional €300 deposit to the platform in September. Meanwhile, I had another great month on Via Invest with over €52 in earnings. The platform also started to communicate more and share more numbers via its blog, something they definitely needed to do more of lately. That's good to see. Hopefully they'll also publish their latest audited financial statements soon. Then we have Income Marketplace, which had another excellent month, my second best so far, with over €58 in interest payments. Next up is Robocash, which has been a bit disappointing lately. After they significantly increased the amount needed to receive a loyalty bonus, they also decreased interest rates further. I now need to choose loan durations of over 181 days to get the 10% minimum I want from P2P. I'm not happy with these latest developments, which is why I moved €348, which were sitting in cash uninvested due to a bit of cash drag, to Mintos and Escatit instead. I'll see how things go in October and decide if I'm going to move more of my funds from here to other platforms, all of which are paying significantly higher interest rates right now. And lastly, Lande, where I invest into asset-backed loans in the agricultural sector, had a below average month. Then again, many loans don't pay interest every month, so October is likely going to be a lot better. And that's everything as far as my active investments in peer-to-peer lending are concerned. Which brings me to my small, high-risk position in the two largest crypto assets, Bitcoin and Ethereum, which surprisingly held up a lot better than stocks in September. Bitcoin was up 6.35% last month with a year-to-date performance of 65.8%, and Ethereum was up 4.13% in September, resulting in a 2023 performance of 41.81% so far. I've been cost averaging into these two as well, since I do believe there's a lot of upside potential going into next year. Thus, I added €500 worth of Ethereum last month using the Netherlands-based Bitvavo, which has become my favorite low-cost crypto exchange, especially now that Bitpanda Pro, which I was using previously, has become a separate company. Just please keep in mind that this sector carries a lot of risk, so never invest money that you can't afford to lose, and limit these investments to a small percentage of your portfolio. For me, that limit is around 10% of my investments. And of course, none of what I talked about today was meant as investment advice. I'm just openly sharing my personal opinion with all of you guys based on my own experience as an investor. Anyway, that's all for today. If you enjoyed the video, don't forget to gently tap the like button and to subscribe if you haven't yet. If you'd like to support me, feel free to use my links in the description below to anything I mentioned in the video. Thank you guys so much for watching, have a wonderful week, and until next time.